Hey everyone, it's Julie here with TipRanks. Today we're taking a look at two stocks that score a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a 10 out of 10 on the TipRanks Smart Score. That looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of this perfect 10 score, they also come in with a strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these stocks over on TipRanks' top Smart Score stock page. That is found right under the Ideas menu, and here you'll find a collection of stocks that are currently scoring that perfect 10. I narrowed in on a medium to large mega cap to get our list of companies down below. You can check out these top Smart Score stocks for yourself over on the TipRanks website or right on the TipRanks mobile app, which you can download using the links in the description down below. And if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into today's stocks. First up, we're taking a look at Huron Consulting. They trade under the ticker HURN, currently priced at $145 per share. In the past year, the stock has climbed 53%. In the last 3 months, it's down ever so slightly, nearly 2%. They currently score a 10 out of 10 on the TipRanks Smart Score, with bullish blogger sentiment and increased hedge fund activity and very positive crowd wisdom. In fact, when we look at the number of portfolios holding the Huron Consulting stock, it has increased over 53% in the last 30 days. Huron provides consultancy services across the U.S. and internationally through 3 different business segments: healthcare, business advisory, and education. They provide strategy, operations, technology, and analytics services, including financial and operational performance improvement, digital transformation, revenue cycle management, and research administration solutions. They help clients navigate regulatory changes and achieve sustainable results through tailored strategies and acquisitions. At the end of April, they shared their first quarter earnings report, where they came out with both an earnings and revenue beat and reaffirmed their full-year revenue guidance. Their earnings per share of $1.68 beat expectations by 52 cents per share, and revenue climbed 11% to $395 million, beating by over $6.4 million. The company also saw their net income increase 36% and an adjusted EBITDA improvement. And the stock does currently score an outperform by TipRanks AI Analyst, which notes that the strong financial performance and positive earnings call outlook are the most significant contributors to the overall score. While the technical analysis and valuation provide a more neutral perspective, the company's robust growth and efficient management are notable strengths. One analyst with a buy rating on the stock is Wedbush's Dan Ives. He commented on their 2025 Investor Day, where the company laid out its near-term initiatives while putting out a relatively conservative 5-year timeline to generate durable, profitable growth as it looks to expand the scale and scope of its offerings. While facing macro uncertainty over the past 12 to 8 months, the company is now seeing an improved macro environment while looking to capitalize on advantages within the enduring and growing end markets. With 5 analysts currently weighing in, the stock does come in as a unanimous strong buy. The average price target of $167 implies an upside potential of 15%. Looking at those ratings down below, they're fairly closely grouped together, ranging from 13.5% to 19% upside. And for our second 10 out of 10 stock today, we have ARAMACK Holdings. They trade under the ticker ARMK, currently priced at $40.51. Their stock has climbed 26.5% in the past year, gaining over 12% in the last 3 months. They score a 10 out of 10 with positive technicals and fundamentals, bullish blogger sentiment, and notably increased hedge fund activity. In the last quarter, hedge funds increased their holdings by 5.7 million shares. ARAMACK provides food, facility, and uniform services to a wide variety of industries, such as education, healthcare, businesses, prisons, and leisure sectors. They operate in 15 countries, including the US, Canada, and the UK, delivering catering, vending, and facility maintenance with a focus on innovation like gluten-free concessions and sustainability initiatives. Just yesterday, the company announced a new slurry of dining service contracts, including some big universities like Adams State, Azusa Pacific, Delaware Valley, East Central University, and the University of North Carolina. In the previous month, they were named the exclusive hospitality provider for the Indianapolis Zoo. Their latest quarterly report came out near the start of May. Now, we did have some mixed results, with an earnings beat and a slight miss on revenue. Their earnings per share came in 1 cent ahead of analysts' expectations, while revenue came in at $4.3 billion, which did fall just $50 million short. But they did see that revenue growth accelerate going into April with a 6% growth rate. The company also had record AOI profitability and reported a client retention rate above 98%. And taking a look at TipRanks AI Analyst, they also come out with an outperform rating. While organic growth came in below expectations again, their annualized new business wins were at a record level for the company, indicating strong underlying momentum in the business. Following their quarterly report, we did have an analyst at Morgan Stanley who bumped up their price target. They said that the organic growth underwhelmed again, but management noted increasing momentum through the quarter and maintained their fiscal year guidance, which investors had worried was at risk. ARAMACK has 8 current analyst ratings, coming in as a strong buy with 7 buys and 1 hold. And the average price target of $45 implies an upside potential of over 11%. Looking at those ratings down below, we have quite a few analysts that bumped up those price targets following their earnings report. Those price targets range from an upside of 6% up to 21%. So that is a quick look at 2 strong buy stocks, both scoring a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these 2 companies and whether they were on your radar before. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. Have a wonderful day. I'll see you back here next time.